Here in part 3 of how can I protect my portfolio, how can I make sure that my pile of money isn't completely going to draw down in a meaningful fashion. Today we are going to talk about a concept called stop loss orders. In part 1 we talked about the true diversification. In part 2 we talked about hedging. Stop loss orders are a part of a trading and investment strategy that's a little bit more proactive. So let's talk about what this is all about. A stop loss order essentially is just something that we can put into the market where we say, okay, at this point, if my, let's say, stock were to go below that level, it would get sold in the market either at a specific price or another price, right? So we can adjust what that price is. Now, the benefit of this, of course, is that we know in any given stock where what our defined risk is, meaning if it goes below a certain point, if it goes more than, let's say, 15, 20% against us, we get out. The con, of course, is that level might be arbitrary. In other words, that level might just be a level where we, from a dollar perspective, don't feel comfortable being in the stock anymore, but it might also be completely arbitrary in terms it doesn't really mean anything about the stock itself. So it might be an amazing bargain to start buying that stock. So that's sort of the trouble, if you will, with a stop loss strategy. A stop loss strategy in many ways is really something that I think is more from a trading perspective, makes sense where we're focusing on individual trades. From a portfolio perspective, again, certainly people do it, but it's just a bit more labor intensive. Now, what I want to do quickly, just before we wrap up this video, I do want to give you a bit of a visual of what that would look like on a chart so you can kind of get your head around it. So here you're looking at just a stock, it could be any stock, and if we say, okay, if this stock were to go, let's say, more than, let's say, 10% against us, so roughly around down here, we would automatically place get hopefully executed around that price in the market, so that we know we can at least sleep at night knowing that we will get executed. Now there's other risks to it. If the stock, let's say, were to gap below that level on news, we might not get executed at that level, but maybe way lower. So again, the stop loss order, it's a novel idea, I think, more for trading than for hedging a portfolio, but I did want to bring it up because it is something that some people do, and even if one doesn't do this for the entire portfolio, it may make sense to do for part of a portfolio, especially this day and age where there's a very high concentration of just a few single name stocks in most people's portfolios. It might be something one could consider for just one or two of the major holdings that one has, or even for just a part of a major holding that one has. So there you go. This is the stop loss order as one way to help protect our pile, a portfolio.
If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.